Morning guys, I'm gonna try to do a video about how to maximize day trades profits for day trades. A lot of us have trouble with sometimes selling a little bit too early on our day trades. I'm one of those guys too, so hopefully with this video um, we can do better. So yesterday in chat, one of the guys, Rad, he made a trade in ANTH. Thought it was a great entry. After the trade, he made comments that he sold too soon. So let me see if I can analyze the trade and hopefully next time we all do a little bit better. Okay, so ANTH had a nice pop yesterday, right here, right off the open, and he took it on the flag, which was a great spot. Right here, I think he called it in chat at, I think it was 991. It's a great spot here, and I don't know what was his stop, but this is what I'm going to try and put out there. A good stop here with a 991 entry for me, at least for me, would be around this area, 970. You can see this candle, it bounced off 970, so there's the most recent support in this chart. It's 970, so that's a 21 cent risk. However, his style of trading is really it's mostly scalping, so maybe his stop was maybe even the low at this candle, 987. So if this was the case, he was only risking around 4 to 5 cents, right? So he ended up selling at, I think it was 1010, and in terms of risk reward, it's not a bad trade, because he was risking around 4 to 5 cents, and he sold for 15-cent profit. So that's a 3-to-1 ratio. That's good enough. And if you constantly trade with 2 or 3-to-1 ratios as your profit targets, well then you do pretty well, because you only need to be right about half the time or even less, and you still would come out profitable. However, if his stop was around 970, that's what I would have done. I don't know his case though. Well then he was risking around 20 cents. Now his target should have been around for a profit for for a around 40 cent to 60 cent profit, because he would have been risking 20 cents. So then his target would have been in the 1030s, right around this area, because then it would have been profiting on a 2-to-1 ratio. 3-to-1 would have been around 1050, but 1030 is okay, is an okay trade. I mean, it's very nice. That's another way to see it. Hopefully his style calls for a maybe a tighter stop, and just you know, the scalp trade where you get 15 cents, you get the heck out, and that's a nice trade. But generally, on a stock like this, it is very, very hard to use a 5 or 6 cents stop. So I'm more inclined in going with a 20-cent stop, and then trying to look for 40, even 50 or 60-cent profit with a stop at 970. Another way to do it is, because if you see on the daily chart, there is no history, price history for trying to determine what's gonna be resistance. I was looking at the weekly, and you can see way back in 2012 there was a high of 1032. But the longer the time frame, traders have less, I guess, less memory of pricing, so it becomes less significant. At least that's what I'm thinking. So another way to do this, to create a target on your day trade, would be to do a measured move. Now if you take this, you make this trading rectangle here, right? You would have, you don't have to go, you don't have to analyze this to the penny, you know, just the range. So you have a low here, 967, and a high of 1010, right? So you have about roughly 40 cents, right? Now a measured move would be to add 40 cents to 1010, right? And that puts you up to 1050. That would have been a very nice target, 1050. See, you almost caught that high. It went higher eventually, but we're day traders. You know, you can even try and buy it again here, just when it went below VWAP, and get another 10-30 cents, right? But the point is, you do a measured move when you don't have a lot of price history. You do a measured move, and then try and put your target roughly in that range. And so that's it. You know, if 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 the case where he if he would have had a 20-cent stop and would have sold for a 15-cent gain, well, then I would say this is not a great trade, because you're just risking, you're doing a 1-to-1 ratio, and if you are a 1-to-1 ratio trader, you need to be right, like, most of the time. I would say 70 or 80% of the time, if you're going to be trading at a 1-to-1 ratio. And that's really hard. Most traders are 50-50. I'm 50-50 trader, and you know, this I'm a regular guy. A 60-40 trader is a pretty good trader, and a 70-30 trader, it's awesome. Now there are some guys out there that they say a 95% 95% of the time they're profitable, but I really don't believe that. Anyways, yeah, that's it. Yeah, you try, you gotta have at least your average winner has to be at least twice your average loser, or a 2.0 profit factor. Meaning, if your average winning trade is $200, then you know, average losing trade should be $100. As simple as that. And if you trade in that manner, you'll be profitable, even though you might you might be wrong I don't know, 60% of the time you still make it. Okay, so and you got to think about commissions and slippage too. So being a one-to-one ratio trader is really really hard. It's very hard. Hopefully this video will help you guys and make you better traders and try and maximize your trades a little bit during the day. We have we're running a free chat. Um, it's only about 10 to 15 traders, I think, but I think we're doing a great job, and a lot of the guys are very very good traders. Red is a very good trader, Dan, and all the other guys. So if you want to come by, you'll be welcomed, and hopefully you learned something from us. We learned from you too. This is I put out this blog every day with 5 ideas, mostly for swings, although I don't swing much. But it's easier for somebody that's looking at this to analyze it, because it's more like you have a lot more time to make the trade. And yeah, right here where it says join small cap trader chat, this is the link. So hopefully we'll see you there. Alright guys, take care, and hopefully this video was good for you guys, so we can be better. Thanks.